Municipal bond interest is generally going to be tax exempt. And what we mean here is that interest on a bond that's used to finance government operations is not taxable. If a state or local government, the District of Columbia, a U.S. possession, or any of their political subdivisions issues the bond for a public purpose. Okay, that's the key there, for a public purpose. Now, it says here, political subdivisions. Well, political subdivisions are port authorities, toll road commissions, utility service authorities, community redevelopment agencies, just those elements of the government that are operating for the public good, the public as a whole. So the interest from these municipal bonds is going to be tax exempt for federal purposes. State and local purposes depends on the bond itself and that state or local taxation agreement. But even if the interest isn't taxable, a capital gain or loss may apply when that bond is sold. Okay, now, we said that we're talking here about bonds that are issued for the public good. Well, private activity bonds, the interest on bonds that are used for most private activities is not exempt from income tax. Okay, it's not going to be excluded. Now, a bond is generally considered to be a private activity bond if the amount of the proceeds to finance loans to persons other than government units is more than 5% of the proceeds, or $5 million, whichever is less. And so this is what is essentially a private loan financing test. If the bond is a private activity bond, okay, then it's not helping the public as a whole. Okay, it's going to be called what is a qualified bond or a qualified private activity bond. Now, the example for these private activity bonds are often used to build sports facilities, business parks, industrial parks, airports, a for-profit hospital. Okay, and so that may look like it's a city, but it's actually going to be qualified as a private activity bond. Now, we have an example about this. Interest on a bond to finance a bridge is exempt from federal income tax. Interest on a bond to build a new sports arena is taxable. Now, the interest from both are reported on Form 1040, but the exempt interest is excluded from income. Okay, that amount of that exempt interest, that qualified interest, is going to be exempt. Now, we do have one more detail that kind of connects somewhere else. When we're talking about these qualified private activity bonds, the interest for a qualified private activity bond is listed separately on Form 1099 because it is a tax preference item when we calculate alternative minimum tax. Okay, we'll see this when we do alternative minimum tax. We've got qualified private activity bonds. They are a tax preference. And so interest from non-qualified private activity bonds is added into taxable interest on that Form 1099, and it's not separately stated because that non-qualified private activity bond does not meet that preference. It's not a tax preference for alternative minimum tax. Now, we don't need to know all the details of qualified or not qualified and how that happens. We just need to know that the qualified private activity bond is a tax preference for the alternative minimum tax, and non-qualified private activity bonds are not. Okay, and so that's what we need to recognize, is that qualified private activity bond is one of the items that is that tax preference when we're calculating alternative minimum tax. But in general, municipal bond interest is not going to be taxable on the federal level when we're talking about these bonds that are being used for the public good, to operate the government, to help that government operate. When we get into these private activity bonds, there may be some taxable interest connected to them, and qualified private activity bonds are a tax preference item for the alternative minimum tax.